Assalamu alaikum to question number 36 Zedtech from your SBR revision kit. This is the March-June 2019 paper, and in this question we are going to cover the two important things. One is your IFRS 15 and the other one is exposure draft. Okay, because we have under current issues we have exposure draft, then we have practice statement, management commentary. So those things also will be coming for your SBR syllabus. Now for part A, it is regarding your revenue. But let us read the requirement first. Discuss the principles in IFRS 15 which should be used by Zedtech to determine the recognition of the above contracts. Okay, this is for 5 marks. How are you going to recognize the contract? Second one is discuss how the above contract should be recognized in the financial statements. Whenever they say in the financial statement means in the statement of profit and loss and in the statement of financial position. In these two places, how this should be recognized. That means in this each of the two statements, what are you recognizing under IFRS 15? For 7 marks. These two are not the same question. They're different question even though it looks similar. Part B, on the other hand, you have been given the consolidated statement of profit and loss. As you can see, we have some exceptional items and then we have underlying results. Okay, we have the statement of profit and loss, normal way. So here you are required to do, which is for 13 marks if you see. Okay, and the first one is for 12 marks. So both are equally, a high amount of marks are there for both part A and B. B talks about discuss the potential impact on Zedtech's consolidated statement of profit and loss if the board were to implement the proposals that are outlined in the exposure draft, which is for 2019-7. Make sure that you know the exposure draft. You have to know it. What are the proposals that are outlined in exposure draft? You should know in SBR. Okay. This is regarding general presentation and disclosure. What they have outlined and how this will have an impact on the consolidated statement of profit and loss for 30 marks. Okay. So part B will attempt later. First we'll go through part A, the case study. Now Zedtech is in a software development company. Okay, as you know the nature of software, it takes years for this to build. It's not that you give software to someone and you can recognize the revenue. It's a bit tough. Okay, because most of the time services over a period of time. So Zedtech is a software development company which provides data hosting and other professional services. Remember, whenever you are looking from the point of IFRS 15, you always have to see how many performance obligations are there. That means how many things under the contract are you to provide? Is it only one item, two item, or more than two? You have to see for this. Okay, so in this case, one is data hosting you will provide, the other one is what? Other professional services. So it looks like there are two performance obligation. If you do this earlier, this will help you later on, so that you don't have to come back to the case study and then again find out, okay, what are the performance obligation. It's better that while reading only you do this performance obligation. Okay, so as part of this services, what services? Professional services. What do they include? Zedtech also securely hosts a range of inventory management software online. It is under the services. Okay, what do they do? This host a range of inventory management software online. Which allow business to manage inventory from anywhere in the world. It also sells hardware in certain circumstances. It sells hardware also, certain circumstances. Now they have two distinct software packages, two distinct. They will give you the information about the packet and everything. How many services or products. Okay, so this is more like a services that you're giving more than the product. Okay, so let's see. The first package named zero inventory, or you can say O inventory, anything. Okay, let's say it is zero inventory. So the named zero inventory gives the customer the option to buy the hardware, professional service and hosting service as separate and distinct contract. That means 3 contracts will be there. Okay, if they go by the first package. I'm going slow here because these things students often they don't understand this properly. They misinterpret things. They understand it in a wrong way. That's why I'm going slow here. Okay, whenever things are new to you, whenever you are not so strong in a particular area, my suggestion is go a bit slow. Okay, In fact, you have to take more time to understand the scenario properly rather than rushing through to finish reading and then answering incorrect things. Okay, don't do that. So under the first package, okay, they can buy hardware, professional service, hosting service. Three things are there. One, two, okay, let's say A, B, because 1, 2 is above also I've written, no, A, B, and C. As a separate contract, that means there will be 3 separate contracts under the first package. Each element of the package can be purchased without affecting the performance of any other element. That means they are independent. You can purchase them independently also. It will not affect the other. For example, if you're buying the hardware, it will not affect the professional service. If you're buying the professional service, it will not affect the hosting service or hardware. It's like that. They're independent, right? Zedtech regularly sells each service separately and generally does not integrate the goods and services into a single contract. You see, they regularly sell each service separately. Even though they are under one package, sell it separately. That means separate contracts. With the second package, which is inventory X, hardware is always sold along with the professional and hosting services. You see, all the three are sold together. Along with the hardware comes professional and hosting services. And the customer cannot use the hardware on its own. You cannot use the hardware. They are dependent on each other. First one, it was independent. This one, it is three combined. I hope this will help you to understand this better. Second is inventory X. First one is zero inventory or inventory. Anyway, you would like to say. So the hardware is integral to the delivery of hosted services. Okay. On your hardware, the software that you are going to give will work. The software. Okay. So Zedtech delivers the hardware first. What do they deliver? They first deliver the hardware, then they give professional service, and finally the hosting service. It goes in this order. However, the professional services can be sold on a stand-alone basis. That means professional services you can sell stand-alone also. It's not necessary that you should give with the hardware then professional only, as this is a distinct service which Zedtech can offer any customer. Why? Because professional services, if you don't give hardware and your hosting services also as a standalone, you can give to any customer. It's distinct. Okay. Now, Zedtech has decided to sell its service in a new region of the world which is suffering an economic downturn. The entity expects that the economy to recover and feels that there is scope for significant growth in future year. Zedtech has entered into an arrangement with a customer in this region for promised consideration of 3 million. See, when a contract is there, remember the 5 things. Okay, in your mind you have to say whether the 5 things are there or not. First of all, rights and obligations of the party. The parties have to agree. Consideration will be given to there. Okay. So at contract inception, that means when you're starting the contract, Zedtech feels that it may not be able to collect the full amount from the customer. They feel this 3 million they will not receive and estimate that it will only collect 80% of the consideration. That means 80% of the 3 million. That will be 2.4. Now, required. So again, after you read again, you have to go through your requirements and again read, because this time you will have a better understanding when you read the requirements. Discuss the principles in IFRS 15 which they should use to determine the recognition of the above contract. How are they going to recognize the above contract? You have to use the rule from IFRS 15. Clearly they have mentioned you the standard. This type of questions should be very easy for you, because some question they don't tell with standard also. You have to recognize, but here you know with standard. Under the standard, use the rule. How do you use the rule for 5 marks? They are not asking the 5 steps. Don't go and write all the rules that you know under IFRS 15. Only that is relevant for this contract. Okay. Then how they should be recognized in the financial statement is the part B. So for both we can use the information that we have read. Now, for the first one is for 5 marks. So it is principles from IFRS 15. And remember, IFRS 15 is also a very important standard. Okay. It also comes not in every sitting, but regularly it comes. Okay. So this can involve few sometimes numbers. You might have to calculate the revenue, or sometimes they might ask you to explain, like here, how they are telling you the principles. Okay. And part B, these are some key answer tips. Let's see, part B is a current issue, right? The exposure draft and all. and it is in chapter 23 of a study text if you're looking for the where it is. Okay, many students neglect this current issue. Don't do that. Even I have made all the lectures on current issue. I've covered all. So go and check. Okay. So these are the 5 steps basically. Okay. But you don't have to list it. You have to explain. Okay. So IFRS 15 states that an entity must first always start with the order given to you. Okay. Don't just start in any order. First, for example, without recognizing that there's a contract with a customer, you don't say that you are going to recognize the revenue under IFRS 15. Come on. Everyone knows that we have to recognize revenue under IFRS 15, but you cannot just say recognize revenue under IFRS 15. This is how you are going to recognize revenue. No, the steps to recognize revenue you have to take for 5 marks. So there are 5 steps. So for each step you are getting 1 mark. It should not be in bullet points, one after the other, 1, 2, 3. Don't put numbers like this. Avoid. If you see your ACCA answer, nowhere they have mentioned answer. They will always write in paragraph. 2 paragraphs only. It's up to you how many paragraphs you want to write. 5 paragraphs, 10 paragraphs, 1 paragraph. Not obviously one, more than one only. Okay, so principle. So first, identify the contract with the customer. This is the first step. 1 mark you will get here. First of all, you should have a contract with the customer. If you have no contract with the customer, if you just say to a customer, okay, I'm going to give, it's not a contract. Contract has to be there with proper terms and condition. If that's not there, then you cannot use IFRS 15 to recognize revenue. Because why? IFRS 15 says revenue from contract with customer. If you are having some type of contract with the customer, then if you have to recognize revenue for that, only IFRS 15 deals with that. But if there's no contract, IFRS 15 will not come into the place. So first identify contract with the customer. It should make sense, right? So as a part of this, entity must determine whether it is probable that the consideration with the entity is entitled to in exchange for the goods that will be collected. This is the second step. What is the second step? Consideration. Whether there's a probability that they will receive this or not. Once contract is there, means consideration also they have to receive, right? Entity is going to receive this. They are entitled to receive this consideration. So that is number 2. Second mark you will get there. Then, once an entity is identified with the customer, it evaluates the contractual terms and the customary business practice to identify all the promised goods or services within the contract. Performance obligation. What are your performance obligation? Number 3 is performance obligation. You identify what are the performance obligation. For example, what are your promised goods and services under the contract with the terms and conditions. Number 3. Number 4. It must then determine which of these promised goods will be treated as a separate performance obligation. Number 4 is about separate performance obligation. Third is performance obligation, all performance obligation. Fourth, what are the separate performance obligation? In this case, there are separate because separate contracts are there. That means goods and services are distinct. They are separate from each other. Okay. And fifth is what? Fifth is what? You recognize revenue. Finally, the last step. So good or service is distinct if the customer can benefit from the good or service on its own. How do you say when a good or service is distinct or not? When that good alone or that service alone can give you a benefit. For example, from professional service, you don't need hardware. Without hardware also you can benefit from professional service. That's why it's distinct. Okay, or together with the resources readily available to it. Understood? Now we are coming to this one. Fifth, you can add it. I think it's not there. The fifth step is to recognize revenue under this one after all these things are there. So let me repeat the 5 steps again. First is identify a contract with the customer. Second, consideration. Third, performance obligation. What are the performance obligation? Fourth, separate performance obligation. Fifth is recognize revenue. Now we are coming to the 2 types of inventory. How you are going to recognize in the financial statement of financial position, statement of profit and loss, right? Both. One is this one is inventory X. You have to divide it like this with different subheading and different paragraph. Okay, if you see. And collectibility. Finally comes the revenue. Okay, so let us go to this one. This we know, zero inventory or O inventory. They will sell as a separate. The 3 contracts will be there. Okay, so how this will have an impact? That means all goods are distinct. All goods and services in the contract are distinct. They are separate from each other because they sell each element separately. Okay, that means there is no dependence upon individual elements of the service. You can independently get them, purchase them. So because of this, hardware, professional service, hosting, they are accounted as separate performance obligation. First identify this. You have to identify this. This word is very important. This word is the word which examiner is looking for to say that they are separate performance obligation. What are the three? Hardware, professional service, hosting service. Three are there. Name them. You are exactly using the rule that you have just mentioned here. Out of the 5 steps, one step is separate performance obligation. Step number 4. Now you're putting this into the answer. This is a separate performance obligation. You don't have to say this is a contract with a customer. You are not repeating the 5 steps here. Saying that they have a contract, zero inventory has a contract with the customer. Then consideration is also they are going to receive consideration. Then they have performance obligation. Then they have separate performance obligation. Then you have to recognize revenue this way. No. Okay, the main theme of this is that they have separate and you can independently purchase them. That's why they have separate performance. Why do they have separate performance obligation is what they have explained. Now we are coming to the inventory X is the opposite of it. Okay, two things we have to talk about. One, they can be together, and the other one is professional service is distinct. So regarding inventory, professional service is distinct because they can sell this on a standalone basis. You have to, these are the facts that is given to you from the case study, make use of it. How do you know professional services are distinct? Because you can sell them on a standalone basis. And this statement, this line is there in your case study also. We just read it, right? So that means this should be dealt as a separate performance obligation. What? Inventory X, the professional service. But what about the hardware? Hardware is integral to the delivery of hosted software. That means hosting services and hardware. This two, they're integral. So they cannot be used on its own. When you're taking the software, you need the hardware also. To run that software on the hardware, you need a hardware and software together. So this means provision of hardware and hosting services, they together form a single performance obligation. You see the difference between zero inventory and inventory X. Inventory, zero inventory, separate. All three are separate. Inventory X only, professional services separate, but hardware and software service, sorry, hosting service together, they come as a single performance obligation. That means one. Okay, now finally we are moving to collectibility, because this is the important place. This is where you are going to tell how you are going to how this will affect, right? So here we know that they are not expecting to receive full contractual amount. They don't expect 80% only they are going to expect, right? So they have to assess the collectibility. Okay, that means how much they can actually collect, how much they expected to collect, rather than the stated contractual amount. Stated contractual amount is 3 million, but are they receiving this 3 million? No. So you have to look for how much you can actually collect. Okay, so Ztech assess whether collectibility is probable, whether the customer has the ability and intent to pay the estimated transaction price. You have to assess all this, whether there's a probability that they are going to collect this 80%, whether the customer has the ability to pay, and whether they intend to pay the estimated transaction price. Now, we don't know whether they have the ability or anything like that. Okay, you don't need also, but you have to write in your answer that this things needs to be assessed. In your answer, you have to write it that these are the things you need to assess. Now, so Ztech will determine that the amount of which it expects is how much? 2.4 million only. This is the amount that you are expect to be entitled. Ztech. Mention the company also. If you want, you can in the bracket you can show a small working 80% of 3 million. That's how you got 2.4 million. Right? You need to do some calculation. That's why you got 2.4 million, right? And perform the collectibility assessment based on that amount rather than the contractual. So when you perform the collectibility assessment, you are taking it based on 2.4 million, not the 3 million, rather than the contractual price of 3 million. Understood? Now we are coming to part B. Part B is regarding your exposure draft relating to your presentation and disclosure. So we are over with IFRS 15. Okay, it is very easy. So we have mentioned first part the principal, second part the both the inventory, how they will be recognized. One is separate performance only, the other one is one separate, the other two are together. And finally the revenue, which is 2.4. Now we are coming to part B. Part B, you are given the profit and loss, starting with revenue, ending with loss or a profit. As you can see, we have a total here. If you see, it's a loss, but we have some exceptional items, and after that, underlying results. What is this underlying results? IFRS does not define, right? It's a profit. Loss becomes a profit suddenly, 68. Now, we'll see what they have written here. So they have a defined benefit pension scheme. All expenses relating to this scheme are presented in admin cost. The associate. So remember, each of these things separately you have to talk about in your answer. The good thing is they are always giving you in a separate paragraph, leaving one space in between, so you know this is for this, this is for this, this is for this. First is about pension expense, which comes under admin cost. Where is your admin cost? Here. Okay. Second, associate is a key customer of several subsidiaries within the group. Associate is a key customer. Number 2 is about associate. Then number 3, a management performance measure called underlying result is presented on the statement face of the statement of profit and loss. A breakdown of adjusting exception items is provided. What did they break down? How they have adjusted the exceptional items. Okay, that is given in the disclosure note. If you see here, they have given the breakdown of exceptional items like this. That's how you have got this figure. So directors are aware that the board has issued this one, general presentation and disclosure. They wish to know what impact the proposals might have on the Zedtech statement of profit and loss. This proposal, how are they going to have an impact on the Zedtech statement of profit and loss? Okay, see, because of this proposal under exposure, every exposure draft has some proposal made by the board. So because some proposal is there, you have to make sure that are you following the proposal, are you in line, or you are going against them. Okay, this is relating to general presentation disclosure. General presentation and disclosure means any presentation and disclosure relating to anything, whether you are presenting a statement of cash flow, whether you are presenting a profit and loss, are you presenting it according to the standard, or are you deviating from it? Okay, so that's what the board is now. They want to see the impact of this. That's why they have issued this exposure draft. Maybe in future they might make an IFRS or standard out of it. Currently, it's a current issue. That's why it's under exposure draft, right? Make sure, please, I beg you, again go through your exposure draft, your current issue, your management commentary, all those things you need to go through, conceptual framework, everything. Because when it comes for exam, it comes for huge marks. It carries a huge mark with it. It usually comes for more than 10 marks most of the time. That's what I've seen. And this is for 13 marks. Okay, so if you are not thorough with this, you are going to throw away 13 marks simply. Don't do this. So now you are going to break down this big chunk of 13 marks into small pieces. You cannot write this answer thinking that I will write 13 points. What are the 13 points you're going to write about? You have to break down. Okay, under every topic you have to write something. So first, when it comes regarding disclosure, when you disclose something or when you present something in the statement of profit and loss, first item is nature or function. This you can carry forward in any question whenever a question is given on exposure draft relating to disclosure and presentation. First is nature or function. This I have covered in my lecture as well when I was discussing the exposure draft for presentation and disclosure. You start with nature or function. You present according to the nature, or you can present according to the function also of the expenses or the income. So first is this. Right now I'm not going to go in depth to the answer. I'm just going to show you the breakdown of the answer, how they have how to write the subheadings. Once in your mind you have identified, okay, these are the subheadings I'm going to write, thing then becomes very clear for you. You get a structure for your answer. Then you know, okay, under this point I'm going to write this, under this point I'm going to write this. This is how I'm going to get my 13 marks. At least 5 to 6 points under 5 to 6 subheadings you can write. Second is operating profit. Okay, let me put the number. Don't put number, nowhere numbers are there. Okay, so first is this, second is operating profit. You can see nature of function, you wrote a lot, but operating profit is very less. So it's, don't try to write equal it will never be in equal length. Okay, you cannot write for equal length. For example, you are writing 5 lines under nature of function. Don't expect that you have to write 5 lines under operating profit only. Because what happens is when students write one line, they always think that they are writing too less. Oh God, I should write more. I'm not getting enough points. This is too less. Don't think. Sometimes it can be like that. That maybe it's just in one sentence you are finishing it. Like here, you can see under operating profit. Sometimes more. Associate. Third is associate. How you are going to present associate. Fourth is other. This I've covered in the lecture, so that's why I can go a bit faster now. If you have not finished watched my lecture, first go through my lecture and then come through and attempt this question. That's my suggestion. Other subtotals is number 4. Number 5 is defined benefit net interest. This is regarding a pension, right? How you got this? The fifth one. See, until your nature of function, operating profit, these two things are easy because I've explained. Associate also, this is also there. I've explained other subtotals. Still other subtotal I've explained in my lecture. The rest is from your case study. Okay, it is dependent on the case study to case study. For example, defined benefit net interest. If you are not given a pension in your question, there is no point of writing this defined benefit net interest as a separate thing. But here you have mentioned, they have told you that the defined benefit pension scheme expenses are recognized under operating expenses. Understood? That's why this we have to disclose. Defined benefit net interest, because this net interest for the pension scheme goes under profit and loss only. Okay. Then sixth, management performance measure. Very important. This has to be there in any answer. Then do we have anything else? No, that's it. So you say 6. Okay, now before I even go through the answer, let me take you through the marking scheme so things become easier. Go through part B. You see 3 marks for nature of function, 1 mark for operating profit, 2 marks for associates, 2 marks for subtotals, 2 marks for defined benefit interest, and 3 marks for management performance measure. Now do you understand how they break out? They break down according to the subheadings that you are using. Under each subheading you have to put. So when you are getting 13 marks, it's not that you are writing 13 points. You have to see how many subheadings, points you can collect from there. Under that you have to explain and write. Understood? So now coming to part A, I will finish the marking scheme here only, so that again I don't have to come. Part A was for 5 marks. How you are going to collect the consideration is for 2 marks, and discussion of performance obligation is 3 marks. Separate together. And second is the 2 inventories. 2 marks for this, 3 inventories for this, because here it's more thing, right? Collectibility assessment. For example, it is based on the 80%, not the full amount, 3 million, right? Apply the above principles to the second part. So part A is quite easy. Now, this you can write in any order. Okay, it does not matter. But usually what happens is start with the things which is very obvious. For example, nature of function, because I've explained you these things. Then operating profit, then associate, then other subtotals. At least the first 4 I have already explained to you. It's there in your lecture also. Any question you take, things will be there. These things you will find very common. So common things write first, and things which are very specific to the question you can write later on. For example, defined benefit net interest, and yeah, that's this. So let's start with the nature of function. Okay. First of all, to know whether it is presented, the expenses are presented according to the nature of the function, you have to look at this. They will not tell you, but you have to see and understand. How are they writing the costs? Distribution cost, admin cost, finance cost. This is based on nature of function. Think. This is based on nature or expense. Nature or function. It's based on function. It's based on function. But you have a choice. You can either present it in a way of nature or expense. So first let's start. They may have been presented by function. They have been presented by function. Start with it. Because in this, your expenses in the statement of profit and loss are presented according to the function. Hence, admin, distribution, finance. Right? So examples also there, right? Cost of sales, then admin expenses, blah, blah. If it is according to this, then it is known as function. If it is presented according to the nature, rather than by nature. Okay, what is the nature? For example, depreciation expense, employee expense, according to the nature of the expense. Okay, understood. You have this choice. You can present either this or that. But remember, this exposure draft, okay, they became more strict and they told that if you're presenting under finance, sorry, if you're presenting expenses under function, then you also have to explain in your disclosure all the expenses that are there under nature, even though you are not presenting according to the nature. So no information has been provided as to why this method of presentation has been chosen. You have to present them the information why this method you have chosen. No information is there regarding that. Okay, why this method has been chosen. You cannot choose even the choice is there, free choice is there. It's no more free choice now. You cannot choose according to the way you want. Why you have chosen it, why do you think it's important that this is the way appropriate method, you have to give them information, and in this case information is not presented. Going to the second paragraph, the board proposes, okay, whatever the points under nature of function you can write. Don't just stop with this. If you're writing this, maybe out of 3 you might get only 1 mark. Don't limit your marks. If you think if you can write, okay. So board propose, what does the board propose? That try to bring out in your answer, especially questions like exposure draft and all on or the conceptual framework. So the board proposes that presentation of expenses by function or nature should not be a free will. That's what I've told you. It's no more a free choice. Instead, entities which must assess which method of presenting expenses will provide the, you have to see which will provide the most useful information, whether by nature or function, then you do give. So factors influencing this decision include what? Wider industry practice also. For example, you're working in a particular industry. Let's say food industry you're working. Under the food industry, okay, let's say this is a tech company, you're going, okay, tech company. So tech company has a nature or a policy or a practice of presenting information according to nature. Then you cannot go by function because compare, you have to compare no, with other similar entities. So you also have to provide in that way. Okay, this also is a factor which will help you to decide in which way you have to present. So as well as the manner in which information is used internally by management. Also the manner in which information is used internally by management. When you're presenting it also, you have to see how management wants it to assess internally. So in both ways, you have to see. After making this assessment with the nature of function, it may be the Zedtech. Now we are linking to the Zedtech. That's what I was wondering why they have not mentioned anything about Zedtech. Every point needs to mention at least one point at the end about the company. You cannot give general answers. All this were general. It should not be a free choice according to function or nature. You have to see which one is giving you useful information. All this are knowledge part. What is the impact on the Z-Tech? So after making this assessment, it may be the Z-Tech continues to present expenses by function. Currently, they are presenting by function. So after making this assessment also, they might fill or they might continue to present expenses according to function, or that it changes to the presentation by nature. So there's a choice. Either they can go ahead with the function or they might choose to change the way they present. That means they might present according to the nature. Okay. Now we are coming to what? Second point, that is your operating profit. Okay. You have to write a separately, you have to present an operating profit. Okay. Before profit, before tax and all. So if you see nothing, nowhere they have mentioned operating profit. So that you have to explain. Okay. So currently, okay, currently Ztech, they does not report an operating profit subtotal. You're supposed to do that according to the exposure draft. So the board proposed to make this, the board has proposed, always mention what the board proposes. Okay, if they are doing something or not doing something, you have to explain, justify why they have to report, because the board proposes to make this subtotal mandatorily you have to, and they have not done it. So always say the board propose in every point, and what they are currently doing or what they should do. This should be in every point. Now we are coming to associate. Associate, we have to talk. Okay. Because separately you have to press. So Ztech has a line item for its share. What does Ztech currently is doing? Line item for its share of profit of associate. right? What is the share of profit, share of the profit of associate? Currently they have, right? They have shown it. So under the board's proposal, everywhere you will see this. Board has proposed this, board's proposal, right? What does board propose? This is why you have to know the exposure draft. Otherwise, how will you know what the board proposed, right? So the board proposed the entities must classify associate into what? As integral or non-integral. Didn't I cover this in my lecture? You have to classify associate as integral or non-integral. Okay, with associate comes joint venture also. Okay, if joint venture is also given, that also you have to classify in the same way, integral or non-integral. Why? Because then the way you present will be different. If it's integral, it will be different. If it's non-integral, it will be different. That's why first you have to classify. Correct? If, if an investment is integral, what do you have to do? If it's not in integral, what you're supposed to do? This you have to write. So an investment is integral if it does not generate a return individually. That means they are integral. They are dependent on each other. They are not independent. If they are getting if they do not get return somewhere individually, that associate, then investment is integral, and it is largely dependent on the entity's other assets, largely independent. That, sorry, if it does not generate a return and does not and is not independent, then it is integral. On the other hand, non-integral means is the opposite. They are independent of the entity, the associate. So in this case, what do you have to say regarding Z's associate? At the end, always come to the company. Ztech's associate is a key customer. Already they have told about the customer in the later down, right? That Ztech's associate is a key customer of many group companies. That means, is it integral or non-integral? So it so so it not independent. So it is not independent. Okay, they have they have missed out one word, that it is, right. It is not independent. Why? Because it's the key customer of many of the group companies. They are reliant on that group. Associate is not independent in this case. So this means associate would be classified as integral because they are dependent. They are major customer of the group. If they were not the major customer of the group, if they have some other business outside this group, then you can say, okay, they are non-integral. They are not dependent. But in this case, no. That's the reason why they have given this point here. Now, if you are asking me why they have given this point, the second point, that associate is a key customer of several subsidiaries within the group. That means they're dependent on this group with the subsidiary. This is the reason. For you to write, use that point here in the answer. Every time, whenever they give you some information, they have given it for a reason. For you to make use of that in your answer. Now we are coming to the other subtotals. Okay, when you divide it in sub headings like this, things become very easier for you, because you are focusing your concentration towards one point only. Okay, other subtotals, what are the other subtotals? You know exactly what you have to write. When you are open-ended, like you are not dividing it according to the subheadings, and you are just thinking of the 13 points to get 13 marks, you will panic. You don't know where to start, what is the ending. There is no structure. So using subheadings in a paragraph gives you structure to your answer. Understood? This is the reason. Now other subtotals. Okay, what are the other subtotals? Underneath the operating profit, after you write operating profit, you have to give this subtotal. That's why I always tell you to follow this order that is given to you, because after profit only comes other subtotals. You cannot write other subtotals at the beginning and the operating profit at the end. So underneath the operating profit, the board proposed, I've told you, everywhere you will see board has proposed this, board has proposed that. So the board proposed entities must report the share of the profit or losses from integral, associates and joint venture. If it's integral, associate and joint venture. Now do you see that first you have to talk about associate and then this, because this one comes after the other. That order you have to follow. Okay, so the board has proposed what? They must report the share of the profit or losses from, the way they have presented, right? They just told share of profit and associate of, sorry, share of profit of associate. But if it's integral, they have to report it separately. If it's non-integral, they have to write it somewhere else. Report the share of profit or loss from integral, associate and joint venture. As noted above, the associate would be classified as integral, therefore reported in this way, and therefore reported in this way. It is reported in this way. Let me see. Okay, operating profit they have not mentioned. They have not even mentioned operating profit. But right after operating profit, which will, let's say it will come here. Then comes your share of profit of associate. Because it's integral. You have to add, right? After this subtotal should be followed by another subtotal. Followed means it will come after that. What is the other subtotal? The another subtotal, remember these things. You have to know it. It's not only because this question is asked. Otherwise also you have to know these things. Any question is the same thing only. Operating profit and income and expenses from integral associates and joint venture. You have to know what is the operating profit and income and expenses from integral associates and joint venture. Correct? Now comes defined benefit net interest. Because right after you add your profit and everything comes your defined benefit net interest. So if an entity has this type of expense, defined benefit pension scheme, okay, the net interest component goes in the statement of profit and loss. First identify this, first write this. That's why we're talking about this thing about here. It goes on the only the net interest component, not the whole thing of defined benefit pension scheme. No, you have to mention that only the net interest component goes to statement of profit and loss, because the remeasurement component goes to other comprehensive income. Then your current service cost, past service cost, this goes under your other expenses. It does not, right? It also comes in a profit and loss account, but here we have to talk about net interest component. Okay, past and current service costs usually we don't talk about it unless they have given to you, but net interest you have to. So the board is proposing that this must be reported as a finance cost. Why? Because net interest can come as a finance cost also. It comes as a finance cost. So the board is proposing that this must be no doubt, no option, finance cost only. Net interest, no anything to do with interest of loan or pension scheme finance cost. Board says that this should come under finance cost, the net interest. And Ztech currently what are they currently doing? Always say what the board is proposing, what Ztech is currently doing, and what the board should have done. Okay, so they are currently reporting this expense within admin expenses rather than finance. So would be required to reclassify. They have to reclassify it. What they have to do in the future. First, currently what they are doing, what the board is proposing, what they have to do instead. These are the three steps in every point. If you understood this, you understood everything. You understood the whole of the current issue. Whenever current issue comes later, you will be able to answer it. So we'll see again the defined benefit. That's the first point. You see, all expenses that is related to the scheme are presented under admin cost. Out of all means your net interest also comes there, no? So that is presented under admin, but it should go under finance cost here. So reclassify it because both told. So this things is pretty easy actually. If you know it, you know it. It's like that. They very hardly can change the type, because the type of question that comes for this is very similar. You cannot what do I say? Not like how your specific standard comes, right? Your IFRS or IS standards are tested. They can come in many different ways. For example, IFRS 16, IFRS 15 can come in many different ways. But compared to that, current issue comes in a very they don't change so much. It's like more like very straightforward. It's like your knowledge part, and then you just apply a little. So it's very easy. I always tell current issue is very easy to deal with if you know it. Then the last is your management performance measure. So Ztech currently reports a management performance measure. What is it? Why are we even talking about this? This comes at the end. Because underlying results. Underlying result is, you can say that is a management performance measure. The management measures their performance based on this underlying results. So they currently report this, okay, which is so-called underlying results. Using a column, they have a separate column for underlying result, right? The statement of profit and loss. What does the board propose? So this is your current situation. Okay, these are the three steps I will write down. Current steps followed by the company. That means currently what the board is doing. Sorry, the company is doing. They are reporting it this way, they are disclosing it this way in a separate column known as underlying results. Second, what does the board, this you can use for your AAA also, right? What does the board propose? For this, what does the, see, for the current steps that is followed by the company, you can use the case study. But what does the board propose? You have to use your knowledge. You have to use your knowledge of your exposure draft. That means you have to read. Okay? You cannot say I have done enough questions, but I didn't read anything on exposure draft. No. And third, these are the 3 steps. Any point, cover the 3 steps and you're done. What should be done? Whether they should change or they should go ahead with the current steps that they are following. What should be changed? Or what should be done? Okay? What should be done in future? These 3 questions you are answering. That's what you are doing. If you read properly, these are the 3. First line, they are reporting underlying result. That is the current step. Second, what the board proposes. That is the second step. Third, what they have to do. So the board proposed to prohibit this because you have to prohibit. Why? You have to prohibit this measure. Because this is not calculated in accordance with IFRS standards undue prominence. You're giving so much of importance to underlying result, but this is not calculated in accordance with IFRS standard. When something is not calculated according to the IFRS standard and you are giving it so much of importance, both says prohibit, it's prohibited. So now the third step. This is the third step. What the entity should do in the future. So management performance measure. What is it? Management performance measure could be anything. In this case, this is underlying results, such as underlying results can be reported elsewhere in the financial statements. This you can report anywhere in the financial statements, but the entity would also need to disclose. They need to disclose these few things. Even though this looks like bullet points, and I told you don't write in bullet points, this is not bullet points because they are writing proper full sentence. They're not just writing short words. 1 word or 2 word. Even if you're writing bullet points, that is to explain that these are the 4 things. These are the 4 disclosure. But they are writing it in proper sentences. Understood? So what they have to disclose? Also they have to disclose this. This is additional information about why the measure disclosed provide useful information. When you're disclosing some measure, for example underlying result, you have to explain them. You have to give information why you think it will give you useful information. Why do you think underlying result will give useful information? You have to give this information. Second, how the measures are collected. It is not done according to IFRS standard, so you need to audit. Someone needs to verify how these measures you have calculated. Third, reconciliation of each measure to the nearest IFRS subtotal. Nearest. You might not have exactly a proper IFRS standard for it, but whatever it is nearest to and according to an IFRS subtotal, reconcile those measures. And the effect on the tax and the NCI of each reconciling item. What would be the effect on the tax and the NCI? Then, any changes in how management performance measures are calculated year on year. If you're changing, for example, 1 year you are using this method, second year using another method, because it's not fixed, no, it's not by IFRS standard. There's no consistency. Any way you can do from year to year. So that's why if there is any changes on how management performance measures are calculated year on year, you have to need to disclose this also. These are the 4 areas you need to disclose. Why do you think information is useful? Underlying result. Second, how you have calculated underlying result. Third, reconcile them to the nearest IFRS standard. Fourth, any changes the way you calculate underlying results from year to year needs to be disclosed. Okay, you can disclose underlying result anywhere in the financial statements. You can report. Okay, prohibit does not mean that you cannot report it at all. No, but once you report underlying results, these are the 4 additional you need to disclose this as well. If these 4 things are not there, you just cannot disclose or report underlying result, because it needs to be verified. It needs to be checked more thoroughly, in fact, because no IFRS standard, no safety is there, right? That's the reason. So if you see this is very easy. Now things has becomes very easy, right? Now you know how you have got the 13 marks. Now we are coming to the examiner's comment. Even the examiner's comment is very short. I think this question is one of the easiest question, right? So when a question requires a discussion of the principles of IFRS 15, okay, don't give a full list. Okay, some candidates, what are they doing? They are still giving a list rather than explaining the importance of each step with regard to recognition. Why it is important? Don't give the full. Those candidates that apply the principle of IFRS 15 to the scenario and distinguished that there's a separate performance obligation in one contract and integrated performance obligation in the second contract, they scored well. Okay, coming to the exposure draft, the examiner didn't comment anything. So I don't know the reason why they have not commented anything on the exposure draft, but maybe because exposure draft is very more or less students will answer similar things. It's not so much varying because answers are there in your textbook. You can easily get it from there, unlike IFRS 15 and all. So maybe that's why. But anyway, make sure now you know what type of question can come from what are the areas and how of a question comes from your current issue. That is exposure draft in this case, how it comes. So make sure that you go and see you in the next question. Till then, take care and see you.